Well, thank you very much, Abu, and I'm very grateful for the hospitality and generosity of the university. It's my first visit to Canada, so please be gentle with me if I get something wrong. I don't know very much about Canada other than where the Calgary Tower is in the city centre because I visited it. My email address is there on the slide if you wish to contact me, and also the internet address for the NGO for which I'm the director of. This internet site has the world's biggest archival source of the offshore world, and everything is free. There are articles, there are books, and there are daily stories. They're run into thousands of items, and you can read them at your own leisure. In the short time available to me, I'm going to give you a brief tour of this world, which should really attract far more attention in the media and by the regulators, but it really does. So, offshore world is fairly complex. It is not always necessarily offshore, because there are links with the onshore world. We are looking at about 70 jurisdictions which make up about the offshore world, but the complexity is some of these offshore entities are also onshore. For example, Nevada, Delaware, New Jersey are part of the US, and they are also in many ways offshore. London itself is an offshore financial center in many ways, and I will clarify that as I go along. There are a whole variety of reasons as to why these spaces, fictitious spaces, exist. For example, if you were to look at how the US government encouraged ships to register in Liberia. Ships never had any contact with Liberia, but they were registered there and thereby able to avoid lots of regulation to do with maintenance, repairs, minimum wage, health and safety, and many other things. So often there are governments behind these things as well. Nowhere in the world is gloriously open, but nevertheless these offshore places are even more secret. Generally they provide low or no tax, and low or zero tax rates for non-residents. In places like Jersey, you could have formed what they call international business corporations. If you did not trade in Jersey, you paid zero rate of tax on your income. In other words, if you are trading in the US or Canada, but formed a company somewhere else and booked your income and profits there, you paid no tax. These places derive the revenue by offering registration and refuge from the laws of other countries. So generally, low no taxes, and therefore they have little reason to become concerned with tax avoidance and tax evasion. So Cayman Islands does not levy corporate taxes, and if you think a Canadian company is evading or avoiding taxes, and you approach Cayman for a corporation, they will say, sorry, there is no such offence here. Go away, we can't help you. So they have no interest in transfer pricing practices which might enable some companies to avoid taxes in some jurisdictions either. Of course, we could have dealt with this by making tax avoidance and tax evasion a subcategory of money laundering, because after 9/11, all governments claim to cooperate to track money laundering, but that kind of thought hasn't yet occurred to many regulators. So transfer pricing, I will give you some illustration. Generally, ownership of companies is not known. For example, last year for a TV company, for a primetime documentary, I investigated in UK the donations made by a billionaire to the UK Conservative Party, and one of the companies involved was registered in British Virgin Island, and I could not find out who owns it. And indeed, companies registered in tax havens, according to the UK law, can become directors of other companies. So all we know behind these companies could be Al-Qaeda, Osama bin Laden. They're the real people behind it, but there is no way. So I contacted a US lawyer, Jack Blum. Some people here would know of him, very famous in Washington, DC. I said, Jack, how do I find out who's behind these companies? He said, well, my dear friend, you've got a better chance of being the next Queen of England than finding out who's behind it. So Prince Charles and Camilla Parker Bowles can rest safely. I'm not applying to be the next Queen of England. So we can't find out about the ownership of these companies. There is complete opaqueness. And these places have 2 to 3 million companies. The top quoted companies in the UK alone have 15,000 subsidiaries that they acknowledged. many of which are in tax havens. And we don't know anything about them, can't find out anything about them. And they generally have low cooperation with other jurisdictions, like the Cayman example I gave you. They are attractive to banks, law and accounting firms for creating avoidance structures. Big Four accounting firms themselves are owned by trusts in tax havens. PricewaterhouseCoopers is ultimately controlled by a trust in Bermuda. So when a committee led by Senator John Kerry was probing the collapse of the Bank of Credit and Commerce International, they asked Pricewaterhouse in the US to cooperate. They said, oh, sorry about that. You've got to go to the London office. And the London office said, sorry about that. We are really controlled by the trust in Bermuda, and they have no information sharing treaty with the US. Go away. So we have huge problems into this kind of a space. Numerous possibilities exist. So there are some key influences on the emergence of tax havens. Some people like to call them offshore financial centers. I like to call them tax havens because it annoys them, and I like annoying some people. So some key definitions, some key influences are globalization. So globalization has been accompanied by abandonment of exchange controls, easy movement of money, but that has not really been accompanied by any thoughts about regulation, public accountability, and lots of businesses want to make profit at almost any cost, and they are providing secrecy by these tax havens. So, and companies are often reacting to systemic pressures to increase profits, and the easiest way they can increase profit is by chiseling away at the tax liabilities. In other words, the return on investment of social capital. We all invest in education, healthcare, transport system, legal system, security. Companies don't want to pay for that. They rather just want to receive the kind of benefits. And also performance-related pay exerts pressure on executives to increase profits, and they increase it by chiseling away at the tax obligations. So there is a rampant rules avoidance industry led by accountants, bankers, and financial services experts. Big Four accounting firms have more offices on this planet than Coca-Cola. They operate in more cities than Coca-Cola. Their global revenue is $95 billion, which makes them the 54th biggest economy on this planet. But we know very little about accounting firms. We can't even find out what their profits are, never mind anything else they get up to. So they are in many ways the epicenter of the global tax avoidance industry. No government is ever going to be able to resolve this problem, make any headway, unless they tackle the Big Four accounting firms first. And globalization has been accompanied by an ideology of deregulation. Pick up the accounts of any bank and you will not know what tax they should have paid anywhere. You get one tax figure. I might be interested in knowing what tax they paid in Canada, US, UK, India, Hungary. I cannot find such a table. They may be trading in one country, booking the revenue somewhere else. Cannot see. Yet that is the kind of accounts which are published. And obviously a lot of this is facilitated by close links between the states and corporate elites. And we have no global institutions which can help a poor country like Nigeria, Ghana, Uganda to collect taxes due to it by multinationals operating in the Western world. There is no global infrastructure to look at this or to deal with.